Coinbase is performing much better than you think. Despite the destruction in transaction revenue for this company in 2022, the business has been building a very strong foundation of subscription and interest revenue that is being completely overlooked by Wall Street. Yeah, it's been a tough year for crypto and companies like Coinbase. FTX has gone bankrupt, so has BlockFi, Celsius, and so many other firms that many people trusted and thought could be the next big crypto broker. But now that people are realizing that most offshore brokers in the crypto space are a complete scam, onshore businesses like Coinbase that have built a record of trust are becoming the forefront of the crypto industry. So how exactly can Coinbase's interest income grow in 2023, and how will it affect Coinbase's fundamentals? That's exactly what I'm going to discuss in this video. But as usual guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So to start things off, let's look at Coinbase's income statement breakdown to try to understand how their transaction revenue has fared against their subscription and services revenue. As you can see, in the third quarter of 2022, their total subscription revenue aimed at around $210 million, up from around 147 in the prior quarter. Whereas their transaction revenue went to around 365, down obviously significantly from 655 in the second quarter. And the key thing I want you guys to keep in mind is this category right here, which is interest income. This grew over 300% quarter over quarter. Meanwhile, Bitcoin is down yet another 30% in that same time. And so what exactly is the value in having that kind of divergence? Well, as you all know, the simple reason why Coinbase has been underperforming is because Bitcoin is down 60 to 70% in 2022. And Bitcoin obviously drives sentiment in the entire crypto space, which ends up driving transaction revenue and the amount of users that use the Coinbase platform. And I've said this multiple times, if you want to invest in Coinbase, you have to believe in the broader crypto space. And that is exactly what I'm doing here. I'm taking a bet on cryptocurrencies recovering in the long term like they've always done in previous bear markets. But now in the intermediate term for the next 12 to 18 months, it looks like Coinbase is developing a revenue stream that is completely isolated from whatever's happening in the broader crypto space. And because Wall Street obviously likes to see financials in the short term to base their buy and sell decisions, this information is going to be critically important for all investors. You see, Coinbase is partnered in a 50-50 joint venture with a company called Circle to support the USDC stablecoin. And this is the entire reason why the company's interest income has been going up for the past 12 months. All the criticism against crypto, which is the volatility and the lack of backing by a traditional financial metric, is completely resolved with the USDC because this ecosystem is completely backed one-to-one with the US dollar. And guess what? Because interest rates have gone up so much in 2022, Coinbase and Circle are both gaining more and more interest on every single USDC that they store. And because all these assets are typically invested in US-backed treasuries, they're exposed to the interest rate fluctuations that the Federal Reserve is enforcing. And as a result, Coinbase and Circle are both seeing record revenue from interest income. Circle's revenue from interest income has actually grown from $7 million to $81 million year over year in 2022, which is obviously much more than the interest rate from the Fed has gone up, which tells us that USDC adoption itself is also driving this growth in income. And so what exactly does this tell us? Both Coinbase and Circle have income streams that are dependent on the value and strength of the US dollar, which itself is dependent on the value of the federal fund rate. And so in an environment where interest rates are going up and inflation is coming down, which is what the Fed wants to do, Coinbase has a backing and a safety net for a revenue stream, which is starting to overtake its transaction-driven streams. And that is obviously huge because the biggest criticism against Coinbase is its lack of diversification of revenue and its supreme dependence on the value and price of Bitcoin. In the long term, I think Bitcoin will recover and Coinbase's transaction revenue should also recover. But in the short term, which is what Wall Street mostly cares about, it seems like Coinbase's interest income is going to skyrocket next year. Circle, as a matter of fact, is expecting its 2022 total income to grow from $28 million to $438 million, and that in 2023, that could jump another 400% based on USDC income. And obviously, because the M2 money supply tends to run inverse to interest rates, in both environments, Coinbase has a metric to grow revenues, even if their total revenues are declining, which obviously is not a surprise because most of their revenue right now comes from transactions. But now that their revenue is being diversified, in the next 12 months, their transaction and subscription revenue could become equal footing in their total pie. And as a result, regardless of where the economy goes, whether that be a tightening phase or an expansionary phase, Coinbase can still find ways to grow revenue in both environments. And that right there is exactly why Coinbase's financials and fundamentals are not as bad as Wall Street is making it out. Yes, in the short term, they're burning cash like crazy, their profit margins are in the negative. But that is not a surprise when you account for the fact that the entire crypto market is down 70%, and the second biggest broker in the world just went bankrupt. And don't forget, Coinbase has been through these crypto bear cycles 4 times over the past 10 years throughout the existence of Bitcoin. And they've faced much higher volatility back in 2017 and 2014 than we're seeing here today in 2022. And as a matter of fact, Coinbase has already cut a lot of their operating expenses in the third quarter of 2022, down from around $1.8 billion to $1.1 billion, which is obviously trending in the right direction. And as we all know, the revenue is mostly out of Coinbase's control because it is driven by interest rates and what the Fed is doing. Instead, we should be looking at what the company can do itself, which is exactly where the business is excelling better than many people think. And for transparency purposes, to reinforce investor confidence, they recently added customer assets onto their short-term investments category on the balance sheet. And that is obviously also being offset by liabilities in the short term on the other side of the sheet. And as you can see right now, the company does not have an immediate liquidity crunch crisis because they have around $107 billion in current assets and around $102 billion in current liabilities. And on top of that, Coinbase is growing cash at a faster rate than they're growing debt, which is obviously very rare to find in a business as volatile as crypto. And when you realize that Coinbase has around $5.6 billion in cash on its balance sheet and is trading at a market cap of only around $9.5 billion as of the filming of this video, you realize that a lot of the innovation and business development that is taking place behind the scenes is being completely overlooked by most investors. Because guess what? If you assume the same growth rate that Circle provided for its USDC interest income in 2023 of around 400% and add that to what Coinbase experienced in 2022, you could get an income stream of around $1 billion solely from interest in 2023, which would obviously value Coinbase's interest business itself north of $7 to $8 billion. Because most software companies that earn interest trade at very high multiples because it's a very high margin business. And so with Coinbase's current market cap of $8.6 billion, you would essentially be getting all those other businesses that Coinbase does, which is transactions, revenue, brokerage, cold wallets, all for free. And if you pair that with the fact that the next Bitcoin halving event in 2024 is expected to be extremely bullish for the entire crypto industry, as it historically has been since the inception of Bitcoin, you can start to see why the long-term bull case for the next 3 to 5 years for Coinbase is starting to improve drastically. But obviously you don't need to just take my word for it. Let's listen to one of Wall Street's own investors who is optimistic about Coinbase's future, even though in the short term the outlook looks very poor.
Hey, thanks Brian, thanks for having me on. There will be winners. This is, I think, darkest before dawn type of stuff makes a lot of sense. It's a very stressful time for the industry. We have probably more shoes to drop, but we believe that Coinbase, given its mission, the way the whole company's been run for the last decade, is going to avert the disasters that are falling many of its competitors and come out a winner over the long run. Crypto is not going away. This is another setback for sure, but we still believe in the long-term value of what blockchain technology can do for financial services.
And Dan, you're not a complete hater, right? You've got a hold. It's not like it's a super sell rating. So what's your take on Coinbase and its prospects right now?
I think the prospects are pretty grim. I mean, all you have to do is read the 10Q. In the third quarter, they made $590 million in revenue and $1.2 billion of expenses with, over $2 billion, $3 billion of leverage. They're burning cash. I mean, this thing doesn't look good. Investors, retail investors are fleeing crypto. They're not coming back. I don't know what's to like about this one.
Well, Chris, how would you respond?
Profitability is improving. I think the gap numbers can be a little bit distorted sometimes. On adjusted EBITDA, they're down to about $150 million loss in the third quarter. It came in actually better than expected. The interest income ramping up has been a nice offset some of the trading volume pressures. I think interest income is sort of an unknown wrinkle when it comes to Coinbase's story. They have a significant interest in Circle. So with rates going up, we see a big tailwind from interest income that'll dilute the reliance on trading volume. And, I certainly agree that retail investors will be pulling back, but I've been following this space for a long time, and we thought they'd gone away forever in 2018, and they came back bigger than ever last year, probably too big in some ways. So I don't think that this is necessarily going away, and Coinbase is built to survive.
Dan, do you think it will survive? In 5 years, will there be a Coinbase as an independent stock?
There's a percent chance, which is not zero, that's not going to happen. And I want to say something about interest income. If you want interest income, own a bank, not Coinbase. The reason they're getting interest income is because they're not paying people's deposits on US stablecoin as much as they should be getting. So if you want something with interest income, go own SoFi. Much better play on interest income. You don't own Coinbase for interest income. That's not the right way to, at least according to my view, that's not the right way to think about it.
Chris?
Totally disagree. I think it's a nice, sort of added revenue stream. People aren't putting their money on Coinbase to earn interest income. I'd rather be exposed to Coinbase here than to be a consumer lender like SoFi, given the coming stress to lenders, given what's going on in inflation in the economy. So, everything has its angle, and Coinbase, obviously, it's not a bank. It's going to be the leading trading platform. What's happened in the world in the last couple of weeks is we've learned that putting your crypto in an offshore exchange that's not regulated is a bad idea. So expect Coinbase to gain significant market share as the fallout continues.
Well, listen, it's a very hotly debated stock, some passionate and good arguments on both sides. Dan and Chris, appreciate it both, gentlemen. Have a happy Thanksgiving. Thank you.